Let's welcome on board Gurmeet Chadha, find out what he's making of the markets right now. Gurmeet, I was just telling Kunal, who's been tracking the charts, that the World Cup win and maybe Monday we'll welcome 20K.
Hopefully, fingers crossed for both. And this is what markets does. And we have seen it now so many times. The moves are very sharp. The news are get discounted both ways very quickly. So moment the U.S. inflation came lower, moment there was a fall in dollar index and the U.S. 10-year. We saw a decent reprieve for the market. But as I was saying, I think the odds are evenly balanced. We have more things coming up. We have state election results on 3rd December. We need to see how things go. But overall, I think the directionally, I think things are looking very constructive as far as India's macro is concerned. We are in a perfect Goldilocks. Corporate leverage is all-time low. Bank NPAs are pretty low. You see corporate profit to GDP, it's back to 5%. So at a macro level and at a micro level, I think things are looking better.
Right. Gurmeet, the other thing we were looking at was the kind of participation that you've had from the IT sector the last two trades, right? I mean, even today, across market cap, IT is the one which is most charged up along with, of course, autos. You think there's merit in looking at IT right now? And are there really any signs hinting at a recovery?
No, actually, so there is some merit in probably some large caps, but the mid cap ITs run up. Just look at the way Persistent or KPIT, even Tata Elxsi to a certain extent has run up. So wherever there has been a bit of a resilience as far as deal making is concerned, order wins are concerned. KPIT, for example, has the best on-site mix. Things have turned up well. And large cap, I think there is still, in my view, you should wait for a broader recovery in US markets. I think moment the Fed formally announces pause, I think that probably will trigger a bit of an upside for IT. So I think Infosys, HCL, in my view, are pretty reasonable at these levels. But in my view, probably have to grind out for maybe 1 or 2 quarters more.
Yeah, it's about whether you want to grind out that 1 to 2 quarter pain, or are you looking at the best opportunity and doing some bottom fishing. So that's the call you'll have to take. But other than that, Gurmeet, have you looked at Mama's IPO as well? It started off in a bit of a limbo, then went below the mark of 300 rupees. Now it's bouncing back quite a bit. Any thoughts here on us, and even Tata Tech for that matter, because that's the next IPO that everybody's waiting for?
I'll probably wait for some better financials to come. We got a little constructive on Zomato a couple of quarters back. I think now there is, the contribution margins is improving. The gross order value is picking up well. 40% jump in their gold membership as well, which means a lot of repeat customers coming. It's now a duopoly now. I think most of the players have tried their hands, including Amazon in Bangalore. I think it's a duopoly now. So probably there's high entry barrier to the business. And I think the way they have done well in this festive season, even Blinkit seems to be on track. I think they've indicated, turnaround next year. Hopefully that should happen. But I think the only risk remains the take margin, which is 22-23%. And there is some resentment in tier 2, 3 towns where the take rates are much higher. I think so. There could be, you have to watch out for that and the impact of ONDC there. But amongst all the ones, I think this is the one probably which looks most interesting.
Kunal, on the Bank Nifty and the constituents, what do you make of this sharp drop?
Yeah, I think I was looking at the components. It was a few large cap names, like I think ICICI Bank corrected by 1%, HDFC Bank also corrected by some 20 odd points. So very few restricted large cap names which have gone through a correction. Bank Nifty back below the 50-day moving average. I think that could be a concern for the banking index. We'll need to see how the closing rates shape up, whether there's any kind of a recovery in the next 15-20 minutes, which could probably lead the bank index back above the 50-day moving average. But yes, the sharp selling has been quite prominent across the banking index. It started off from there, and now I think it's moved on to the other constituents as well.
Yeah, it has. IndusInd Bank has flattened out. Even some of the other heavies like L&T are lying absolutely flat. Kotak Bank as well has completely fizzled out. That's the case with SBI as well. ITC too is now just about marginally soft.
Yeah, but do you think this could be the weekly expiry move? Because is that coming at play at 3 p.m. today?
I think it's the Nifty expiry move today. Bank Nifty is already expired.
Bank Nifty is changed to?
It's changed to Wednesday.
Okay, so it can't be even that, this sudden drop.
Correct.
Okay, nonetheless, we were asking that question to Gurmeet as well as to what he makes of the banking index right now and the constituents. Gurmeet,
Sorry,
Gurmeet, the question
yeah.
on the banking index, the large private banking names which have been underperforming, would you be a buyer at these corrections? Will you wait by for such corrections to just take up these long-term ideas and investing bets?
Well, absolutely. While I know it's been a grind in some large private banks, HDFC for 3 years now, ICICI Bank for almost a year. But I think the risk reward is much favorable vis-a-vis the NBFCs. A lot of good NBFCs are already trading at 5+ book value, whether it is Chola, whether it is Bajaj, whether it is some of the new digital ones, including let's say Poonawalla, etc. So I think banks offer better risk reward, and if rates remain higher for longer, I think the liability side will start differentiating. So I think the Axis is below 2 book value. SBI is almost 1.1 book value. So definitely, and I think in an economy which does 7% kind of a GDP growth, 12% nominal growth, the credit growth is usually in line with nominal GDP growth. So I think we will probably sustain 14-15% credit growth, and I think banks should do well. So there is some margin of safety also, especially in HDFC, ICICI, and Axis.
Okay, point taken. So that's the view coming in on some of the banking names. What else is happening? And is Nifty also losing steam? Let's pull up the Nifty chart and see what is that up to. So yes, that's also dropped almost 100 points from today's high. It's 19,740 now. Of course, if the bank Nifty is reacting, there would be a parallel impact when it comes to the Nifty as well. Let me take a look at the other drags as well. So apart from ICICI Bank and Axis Bank, ITC, that's pressurizing in index by around 9-10 points. You have L&T and Coal India as well. Naresh, comment on the charts of ITC and L&T.
So again, going sideways for ITC now after that big move which happened in July, it went to 480, 500, topped out on the good news. Now the stock has become sideways. Earlier, the support was around 435, broke below it, but did not see any selling pressure. On the upside, 450, 55 is the resistance. So expected to be in a range of 430 to 450. So roughly a 20-point range going forward for some time to come. So technically no trade here. L&T similarly made a top around this 3150 mark, made a little bit of a drift, did not break the recent swing lows. So now, for now, the range is 3130, 3150 on the upside and 2900 on the downside. So for now, still sideways on L&T. Longer term trend is still positive for the stock, but for the short term, sideways.
Okay, point taken as far as some of these industrial stocks are concerned. In the meantime, let's take stock of what's happening in the broader markets as well, and which are the stocks which are still holding up with good gains. So you have names like Sterlite Tech that continues to be in that list. MapMy India, Manappuram is actually also doing quite well, and then Welspun Corp sitting with a gain of almost 5%, Prestige, etc. Some of the other names as well. On the losing side, Jyoti Labs is one stock and Kalyan Jewelers as well as Welspun Living. Gurmeet, what's your take on this entire textile and the retailing space? Welspun Living has been doing quite well for itself. Trent obviously continues to report very solid set of numbers. Though Page Industries and others haven't been doing so well. Which are your top bets?
We have a mixed view here. One thing we like is the apparel export. So we were lucky in terms of getting into Gokuldas much early, almost 6 months back. They just acquired a company in Middle East which has plants in Africa. So not only you get the labor cheap, they also have access to EU with some duty exemptions. Also, Bangladesh this year has a wage revision which happens after 10 years. So that cost advantage also should get mitigated a little bit. They acquired this company at 7 times, so they do about 2,200 crores top line. The company they acquired does about 700 crores. And so despite the run up, the stock is still about 20 times. And if the UK treaty goes through, I think they would benefit. They make they work with players like Gap, Puma, Adidas, H&M, etc. So largely US, 80% is US. So that's something we like. KPR we like. So we are selective here, but so you have to track what are beneficiaries of PLI, what will get benefited due to the regional treaties we have. So there's a bit of regulatory and political angle in it. So you got to be a little more selective.
Gurmeet, just stay with us. I'm going to quickly take it across to Sharad as well and find out what the dealing room chatter is. What are the stocks which are being talked about? Sharad?
Well, yes, in focus we are having Wockhardt, and what we are hearing from the dealers is that a strong delivery-based buying is coming for the stock, and this is coming especially in the HNI category. Now, the volumes also, if you look at it, it's almost 16 times its 20-day average, and the stock itself has given its highest jump seen on almost 20-odd months. Now, importantly, the volumes have also been very strong, and company came out recently with its Q2 numbers also, and the numbers were very strong, especially on the operational front. The losses, they reduced as well sequentially as well as on a year-on-year basis. Now, the street is factoring in a turnaround strategy also going ahead for the company. And do remember that in terms of marquee investors, Rekha Rakesh Jhunjhunwala has almost 2.04% stake in the company as well.
Okay, all the buzz around Wockhardt. But Gurmeet, since you just flagged off and, talked about the state election results, just wanted to understand whether that's going to be a market-moving event at all or not. Or do you think that's pretty much in the price?
No, unless there is a big drop in vote share, of the ruling party, I think it shouldn't be a more than a couple of days event. On the contrary, if they do well, and win probably a couple of states, I think the market should take it positively. I think the focus should be more, I think, on rural-facing stocks. I think that's where as a portfolio manager, I would look. But that's the part of the economy which is soft. Urban is clearly doing very well. Also, there's a lot of negative news in agrochemical space, two-wheeler space, and the rural economy linked themes and sectors. I think that's where probably there is some value for money. So look at, for example, PI Industries. I mean, it's done very well considering it's the CDMO play in agrochemicals, considering the non-performance in others. It really stood out, right? So something like Tata Chemical traded 10 times. Again, agrochemical play, soda ash, as well as they're also into specialty chemicals in terms of battery parts. So there's a lot of valuation comfort in that space. And if things turn around, I think agrochemical, two-wheeler ancillaries, I think they offer a lot of value.
Okay, point taken. But since we are talking about a few IPOs as well, there was one listing that happened on Monday, and that was Protean E-Government Technology Limited, or NSDL as we know it. That stock had seen a listing of around sub 800 rupees, and earlier in the day it was trading above that, very close to that 1200 rupee mark. It's actually cooled off quite a bit, as has the rest of the market, because at one point of time it was up almost 15-16%, but now still holding with a gain of around 6%. We spoke with the management earlier. Listen into what they had to say.
We are expanding into new areas. Our first area of expansion is in the space of open digital ecosystems. This is largely leveraging on the underpinnings of the government policy framework, where the government is looking at national open digital ecosystems being created in multiple sectors. We are today having interventions and ODEs which are supported by the company at an infrastructure level in the space of digital commerce, mobility, health, agriculture and education, which takes us from our strong points of the BFSI sector but gets into multiple sectors for us. Similarly, on the ID services side, we are looking at a vertical integration, which is our second business foray, to build a complete digital onboarding and data allied services business, where we are also going to be leveraging our account aggregator license, which we received from the Reserve Bank of India. And third, we are looking at building a business on cloud services and infosec consulting. So we move from a 3 vertical to a 6 vertical business. The intent also is to take this entire unique combination of DPIs to global markets, especially to developing countries which are at a similar stage where maybe India was a decade ago.
Okay, quite a significant drop actually on the Nifty Bank, a good 0.6% fall from the top of the day, and that's clearly having its rub off, unfortunate as it may be, on the Nifty too, because the Nifty as well is now about just 0.3% in the green. Having said that, barring metals and banks, the rest of the sectors are holding out very, very smartly. Autos continue to chug along. There's of course IT, which is holding out very smartly, like we said. And then besides that, even Bajaj Finance for that matter, what a remarkable recovery you've seen in that stock price after that knee-jerk reaction that you had when the stock opened for trade, that's completely gotten bought into. I think it was down about 2.5% to start off trade with. From there, it's holding up 2.5% as we speak. Gurmeet, what's your take on Bajaj Finance? You don't think this RBI move, although the company has clarified that it's just going to be for 60 days, but who knows, it could get extended, that's going to have any meaningful impact on Bajaj Finance, given that the festive season or a chunk of it is already behind us now?
We just want to wait it out in terms of, I think the incremental impact is probably 3-4% on the two categories. And also the issue relates more to the classification rather than any serious compliance issue. So hopefully, I think there should be a speedy resolution. Also, they've done a fundraise. Earlier the concern was because the stock is expensive, trades at 6-7 times. Can they sustain 30% growth? So I think they've upped the guidance now, looking at the QIP, etc. So I always call this as a consumption stock within the financials. So I think if consumption remains strong, I think Bajaj should be valued both on book value and on EPS growth, and I think they can sustain 30%. So it may not be the multi-bagger it has been, in last 10 years, but I think it should be very steady going forward. The better ones, as I said, are something like Home First, which is into affordable housing. We are seeing a very strong housing upcycle, and it operates in the affordable housing, where they also do a lot of co-lending. Very specific geographies they operate in. The average ticket size is about 10-11 lakhs. And they've done very well, 5% kind of NIMs, 4% plus kind of ROA, good pedigree. So that's something we like in this space, other than banks.
Sure, interesting. Since we're talking about the larger financial universe, here's VP Nandkumar as well from Manappuram Finance. He spoke with us just earlier today, and he's talking about how the gold loan portfolio is going to pan out from here. And he says that he expects extremely positive growth in this category, even going forward.
Gold loan, our expectation is to grow around 10% annually, and we expect that to grow, because we are the coming quarters are usually better for gold loan. And now, more importantly, we have other portfolios too, secured portfolios. We are growing those portfolios along with our gold loan portfolio, like MSME, secured MSME, commercial vehicles, etc. Because we have a very large customer base, both in Manappuram and the subsidiaries. So in these secured segments like commercial vehicles as well as secured MSME, our penetration compared to our potential has come to only 1/5. So we have that opportunity also along with the gold.
Coming in from Manappuram Finance, that stock has been doing quite well this week at least. It's up 7% today. If I have it right, yesterday too, that stock was high by 5 to 7%. So with the last 3-4 trading sessions, it's had a good run so far. The other names include Alok Industries yet again. You have Marks and Swama, which is doing quite well. CSE, that forgotten name, has managed to kind of climb up 5%, and then Prestige Estate. Gurmeet, what's your take on real estate? Would you still buy at these high levels, or for the people who hold these stocks, maybe just continue to hold, but not the best time to buy or add position?
Constructive on real estate. The reason being, there is a structural change post-RERA. You're seeing consolidation. The stronger builders are seeing not only the pre-sales going up, significant debt reduction as well. So look at, for example, DLF. First time you're seeing cash flow generation, significant fall in debt. They last year did about 15,000 crores of pre-sales. They are guiding for another 18-20,000 crores this year. Very marquee name, especially in the high-end luxury segment, especially in Gurgaon. Also, the DC CPL portfolio continues to do well. Almost 1,400 crores kind of rentals. Occupancy levels are high. Some point of time there will be some value unlocking there as well. And a lot of these companies, so DLF, for example, was $1,200 in 2007. It's still half of what it was. So I think I'm constructive, but you got to be a little careful in terms of what you select. Home improvement, which is a broader building material, there I think probably the balance sheets are even better. There the P expansion can be more. We've seen P expansion already in Polycabs and APL Apollos of the world. You'll probably see more building material companies in tiles, in sanitary ware, in some of the other spaces, home decor really coming up.
Great to have you in the show as always. We'll let you go on that note.